joining us. I'm Erin Yarbrough with Ideal Homes and Neighborhoods, and I am here with Alex Hawkins from CSolutions. And we want to talk a little bit today about financing. There are a lot of questions out there about what can I afford? What can I qualify for? How do I get qualified? What goes into a qualification? All those things. So I'm here with Alex, like I said, and Alex, you've probably seen a lot of people over the last 6 months really kind of going through the highs and lows of what can I afford today versus what can I afford tomorrow, huh?
Absolutely. I definitely think it's one of those where people are really tired about hearing unprecedented times, and I'm in the same boat. So I understand the frustration a lot of people have been having.
Yes, absolutely. And CSolutions is one of Ideal Homes and Neighborhoods preferred lenders. And so whenever you work with an Ideal Homes and Neighborhoods preferred lender, you actually get some financial incentives that you don't get if you work with an outside lender. And so we'll talk a little bit more about those later. But that's one of the reasons why, Alex and then one of our other preferred lenders citywide, why CSolutions and citywide really see the vast majority of our customers come through and really know how to take care of our customers very well, because they're working with us day in and day out. So, Alex, if it's okay with you, I'm gonna just kick off with some questions, if that's
Yeah, let's
okay.
do it.
All right. So, you know, the mortgage rates are changing every day. We see it
Mhm.
on the news. I'll be honest with you, I don't really know day in and day out what it is because it changes so frequently. So, how do customers stay up to date on what the current interest rate is? Maybe, what that looks like. Will they get that interest rate automatically? How does that work?
So interest rates are based on a variety of factors. It can be based on credit score, loan type, down payment. A lot of things go into those on determining the interest rate that you would be possibly approved for. When you call a bank or a brokerage company or somewhere and ask for an interest rate quote, majority are going to give you the best possible rate that they can provide for the people with the best credit scores, the biggest down payment, the best or lowest debt to income. But if you really want to know and get a general idea for yourself, you can call up there, kind of give them a general idea of your credit score, if you know it, which we can go into a little bit later, and they can give you a general idea. But do keep in mind, all of these factors determine the interest rate. And so when we quote one, we try and get very close based on your credit score and general idea of your debt to income. But that interest rate is usually spit out, to put it like that, of our system when we've uploaded your credit report, your income document, so they can assess the risk factor. And when that comes out, that's what that interest rate is. But a lot of things go into determine it, but we can give a general idea based on loan type that you're wanting to do and your credit scores.
And so if somebody doesn't know their credit score or know what loan type they want to do, we can help with that, right?
Yep, absolutely. So there are 15 different ways to score a credit report. So a lot of people call and they'll give me a credit score, or they'll say Credit Karma said my scores were this. A mortgage company's credit scores are the most in depth. Therefore, our credit scores that we pull as a mortgage company are usually the lowest. And it's because they weight so many things heavier than, say, your credit card score or your car payment score. Credit Karma is 50 to 100 points higher or lower. It's a
Okay.
great system to determine if somebody's pulled your credit, removed something, or somebody's added something to your credit. But score wise, the best possible chance to get that is going to have a mortgage company pull it. That's your true credit score that they will use to determine the interest rate. And Ideal's preferred lender, when you come through our system initially, is a soft pull, which gives us a pretty good indication of what your scores are to give us a good idea.
Okay, so let's talk about that a little bit more. What is a soft pull? I know that, one of the things that we hear a lot are, I don't want to get qualified because pre-qualified because, I don't want it to hurt my credit score. And I hear that if you're doing a pull and checking it out, then it's going to hurt my credit score. So what does that mean?
Yeah. So hard inquiries are going to be if a mortgage company pulls it, we would have to pull it 10 to 15 times in a 3-day period for it to lower your credit score.
Okay.
Too many like inquiries may have impacted this credit score is pre-printed on every single credit report, even if you haven't had your credit pulled in 10 years. And I have checked this on my own to make sure I'm giving proper information. So the soft pull, it's a different credit scoring system, but it's still very, very close to a hard inquiry. So the difference in scores would be minuscule. So there's really no harm in having the soft pull. It doesn't go on as an inquiry. It gives us general idea. But for other lenders, preferred lenders as well, for us to give you the best possible information, we will have to have that hard inquiry, but we will get that pull correct on the first time. We won't have to pull it several times. We're not going to do anything to lower the score. It doesn't do any good for us to do it that way.
That's good to know. So there's really no risk
No.
in getting that kind of pulled and going through us to just check out what they could qualify for as far
Exactly.
as
Yep. Give you a general idea. Even if you aren't
interest
going to
rate.
be in the market for 6 months, it gives you a good place to start.
Okay, that's really helpful. So if somebody's out there shopping for a new home and they just don't really know not even what they can qualify for, but what they can afford, what's the best place to start? Where do they really start that process?
So we would go back to the credit authorization that we have to pull a credit report. How the best way to determine what your max qualification amount is going to be taking everything that's showing on your credit report, payments, not balances, plus your income information so that we can run what's called a debt to income ratio.
Okay.
And that means that all of your debt that's reporting on your credit report plus the projected house payment would be what percentage of your gross monthly income. And we figure that using your credit report and using your income information. A lot of people don't truly know what they make. A lot of people don't truly know what their credit scores are. A lot of people think that we're counting credit card balances, not payments. And so you sometimes think that that's going to push you out of being able to afford a house, whereas you might be pleasantly surprised once we go through it and figure those numbers for you.
I also want to say, if there's anybody that has any questions about this, please feel free to leave messages on our Facebook Live here. We'd be happy to answer them here or later. We can also message you later. But Alex, there are situations where somebody thinks maybe they've been through bankruptcy or somebody thinks, I cannot afford a home or not afford it. I cannot qualify for a home. But there are some unique situations that we can figure out some other ways to get them to qualify, correct?
Definitely. Yeah. I mean, bankruptcy type is totally dependent on the loan type you're wanting to use. The wait time is different for bankruptcy chapter 13, chapter 7, for a conventional loan, FHA, a VA loan. All of that is different. All of those requirements are done differently. It's kind of like what I would say going to a doctor. A lot of people don't want to go to the doctor because you don't want to receive that bad news. But you can't get started or can't get true information or a way to get a plan A, plan B, or even a plan C together if we don't have any information. And so I always encourage my customers, especially, let us pull it. There's no risk. Let us look at it, at least point you in the right direction. Because the longer you bury your head in the sand, the longer it's going to take to figure out where you need to be, if you're already there. I mean,
Right.
there's
And
many
just don't
ways to
know.
go through that. Absolutely.
Right. And Alex, for everybody listening, Alex is actually one of our kind of financial advisors for our customers. And so Alex does a great job of, if you really can't qualify yet for a home, Alex can give a lot of tips and advice on how to get there. And so that's probably what you spend a lot of your time doing, right, Alex?
Mm-hmm. Yep, definitely. A lot of times it's just coaching, giving a general idea. Most people, I joke that you don't learn this in school. I mean, you've learned the Pythagorean theorem and all of these slopes and things like that for geometry, but nobody knows kind of how to figure how much you make, what you can qualify for, how to use your credit cards for the biggest bang for your buck. And that's what I'm here for. And I'm free to people who want to buy an ideal home. I'm a great resource. I've been doing this over a decade. Was trained by one of the best who retired and no longer works for Ideal Homes. And I want to help. And even if it's one of those where you can't buy right this minute, let's get a game plan together so that you can buy. I mean, the future is limitless. And especially with credit, I cannot overstate enough how much credit is important in saving you money in the long run, even if you're not buying a house. So I'd love to be able to help and look at it.
That's really great to hear because we do have so many people that, may feel like their credit score just isn't strong enough, but they're ready to kind of start thinking about a house and, things like that. Gwen, one of our new home consultants, just messaged us and said that you've helped so many of her buyers and our buyers with your expertise. So we know that we have a lot of customers that really, really get that help.
Mhm.
Um, so when we're looking at affordability, what really contributes more to the idea of monthly payments? Because when we have somebody coming in who may not necessarily know what they can afford as far as the price of a house, but they know what they can afford on a monthly payment
Mhm.
basis, um, what contributes more to the monthly payment of your home? Is it the price of the home itself? Is it the interest rate? What's kind of the breakdown there?
So it's kind of a combination of both. Interest rate is probably going to be your biggest factor as people who have been looking for a while. This time last year we were in the mid threes or low threes, and now we're in the high sixes, mid sixes. Unless you use Ideal's incentives, could be a little better. But that changes so much in the payment. The sales price, even if you're putting a big down payment down, your taxes and insurance are always going to be based off of your appraised value. It is not
Okay.
based off of your loan amount. And so the
Okay.
sales price does factor in a little bit on the payment there as well. But still, with interest rates being under 8%, historically, they are still very, very low. And the difference in payment between a 6.25% interest rate and a 6.5 isn't going to be as much as you think it is.
Okay, that's helpful. And when we talk about that, we do have some financial incentives right now through Ideal Homes and Neighborhoods when we use one of our preferred lenders, Citywide or CSolutions, and everybody, you don't even have to choose. We kind of help you through that process ourselves. Um, how do those financial incentives affect that monthly payment?
So we have two financial incentives right now. I'm going to go more in depth on one because the other one is so subject to buyer situation that it's too hard to give a huge explanation
Generalization
on it.
for,
Yes.
yeah.
So we have the most popular one, which is the 2-point buy down. It sounds a little deceiving at first, but what that means is Ideal is paying up to 2 percentage points of your loan amount towards buying down your interest rate. It does not mean if the rate's at 7, it goes to 5. It doesn't quite work
Right.
that way. Based on how much money that's going to save you on your interest rate is also going to be determined by your credit score, the loan
Okay.
type, all of that good stuff that we've talked about previously. But it is still going to make a huge difference than if you didn't have any money that's given essentially freely to get that
Right.
rate down and save you money each month.
And I
The
think
other
we've
one
even
is
seen some customers getting up to 1 point off,
yes,
for their
yes,
full 30-year
mhm,
loan, which is significant savings.
very, very much so. And we have the other one, which is your 2-1, which is basically it's essentially Ideal Homes is going to pay 1% of your interest rate for the first, or 2% of those points for your first year, then 1 for your second year, and then it goes back to that rate for the third year of what it's going to be for the rest of the life of your loan. Again, this is very, very, very customer specific. To get your best option there, we'd have to pull a credit report, look at your income, determine what loan type you want to do, and back into those numbers for you. And what's great about the preferred lender is both Citywide or CSolutions can back into those numbers on both incentives and can show you here are your options either way and decide what works best for you and your family. And they're wonderful incentives.
And the great thing about that, even though they're a limited time, is that you can actually, we can work with customers right now to determine if they can, what that monthly payment's going to be with those financial incentives before they even sign a contract. So
Absolutely.
they're not locked into that price before they determine, which incentive would be best for
Yeah,
them.
give you a general idea as long as we have that information so you can walk into there knowing truly if you want to afford it or can't afford it.
Right. Hayden says Alex can help me get a game plan for buying a house in the future if I can't buy now. Absolutely.
I
And
have
that's really what
several
you work with a
people.
lot of customers on, correct?
Yep, that's the majority of my customers are people who possibly are not ready to buy quite yet, or even ones that are custom building, kind of doing two birds, one stone, where we get our financing together, credit together while houses are being finished. Also ones that maybe have a bankruptcy where we do have a little bit of a wait. We can still start your credit now to make sure that when that wait time is over, your credit is ready to go so that you can pull the trigger and buy a house.
That's right. And so when we're talking about interest rates, again, hear it all over the news every single day what the interest
High,
rate is.
low.
When we're talking about interest rates, when do you lock in your interest rate? Like when do you find out what interest rate you will get? When do you lock it in on your home to get the best interest rate you can? How does that work?
So what we'll do is, once again, going back to that credit authorization, get your credit report, your income information, kind of determine your loan type based on those. And then when we begin the home loan process, when we officially take your loan application, is when we will lock that interest rate in. This isn't the application you do online. It's once you talk to a loan officer, get all their information, and they input that in the system, they can give you that interest rate, and then that interest rate is locked in.
Okay.
Usually for completed houses, that's done very, very quickly. Obviously, we're trying to get you closed as quickly as we can so you can be in your new house. For those custom ones, it's usually about 60 days prior to closing is the earliest we can lock those in. Both Citywide and myself do watch those interest rates daily. As you said previously, they do change daily based on the market, high, low, back and forth constantly. And we keep an eye on those so that if you are custom building and it's one of those we maybe want to look at locking you in early, we do try and do that to save you as much money as possible.
That's fantastic. I know that that's, a lot of people are just very confused by interest rates, myself included, and just, what that means for you personally. And I think that essentially the gist I'm getting is that once you work with us and, work through Alex and Citywide, we can really help you
Mm-hmm.
understand where you are because you are not alone in not understanding all of the intricacies of this.
No, and they change constantly. And buying a house, I joke with my parents who are in their 70s, my dad wanted to refinance and was like, "Oh, I remember how to do this." And I'm like, if you haven't bought a house in the last, even now, 3 years, the process is different, the system is different. You are not alone. It changes constantly on us sometimes. As we were talking earlier, I got mortgage news that things were changing, and comes out through the system that'll change in May. And so we very rarely get a huge heads up, but that's our job, is to watch that, check that, make sure that we have a game plan ready for you and for your family so that you aren't left hanging and that we can give you the best possible information, the most accurate information up front so that you can make that decision that works best for you guys.
Absolutely. And I think that, especially with the financing incentives that are out there right now for my homes
Mhm.
and neighborhoods,
Absolutely.
I also failed to mention, which I should mention, that buyers also get a $4,000 credit towards closing
Mhm.
costs whenever they use one of our preferred lenders, which honestly is actually more than I think any other builder in Oklahoma I've seen. So that's a significant amount that will help, especially with those last minute, purchases you need to make to your new home.
No, absolutely.
Um, yeah, I mean,
Huge
I could
balance.
definitely, yeah, use that money, right? So I think overall, I think we want everybody to understand that this is a confusing process, the financing side, and we
Mhm.
have experts like Alex ready and willing to not only help you understand, but also help you get to a good place in your credit or in your financial
Mhm.
journey to be able to buy a home, even if you're not ready. So
Absolutely. Yeah. The only stupid question is the one you don't ask. We want to help you. We want to answer your questions. We want to give you as much information ahead of time, and we want to help. And even if it's something that is not the right time for you, at least you have an idea of what it will be, and that we haven't just sent you on your way with a no. We want to
yeah.
send you on the way with the correct information to make a decision in the future.
That's right. Well, thank you so much, Alex. Thank you, everybody, for watching. Feel free to continue to leave comments. We will
Absolutely.
check up and answer any questions that we can, and we'd be happy to help in any way we can. So, thank you, everybody.
Absolutely.